Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is T3 professional trader Brandt Hersh, a new guest here on this program. Thanks so much for joining me today, Brandt.
Thanks for having me, Greta.
All right. So just so everyone who is here knows, if you've been here before, you know this, and if you haven't already, welcome. This is a Q&A event between Brandt and myself, but also a Q&A event between you guys and Brandt. So I am putting a comment in the live chat now so you can see where it is. And that is where you will ask all of your questions. So please submit those throughout the first half of this event. And then in the second half, I will make sure that we get to all of those as in order. So just submit them as they come up. It doesn't have to be related to our conversation today, but if you hear anything he says that sparks another question, go ahead and ask it. Okay, Brandt, so you're new to this program, so I want to start off first with you introducing yourself for the audience. Tell us how you got into trading overall, how long you've been trading, how you found T3, etc.
So I've been trading, wow, it's been about 20 years now, longer. Um, and I started off trading on the floor of the NYMEX, which is a commodities exchange. I traded commodity futures and options, natural gas futures for about 10 years, and then about 2 years in crude oil options. And I traded both of those in the pits when it was still open outcry for screen trading. And I ended up there through my brother-in-law, who brought me down as a summer intern. And I had planned to go into law at the time, but after about 2 weeks on the floor of the NYMEX, I said, I'm never leaving this place. And I reconsidered my career, and I never stopped trading since.
Wow.
Yeah, so after, you know, once electronic trading started taking a lot of the volume out of the pits and it started migrating to the screen,
Mm-hmm.
I left the pit and traded commodities on the screen for a while, and then just ended up dipping my toe in equities around 2018 and found my way to T3. I believe I saw a post about it online, and then just started talking to them. And within like a year, I was there. After talking to a few other places, I liked what they had to say best.
Hmm. How would you describe your personal trading style?
Uh, yeah, you know, I guess if I'm using a baseball analogy, I try to hit for average. I go
Mm-hmm.
for base hits, not home runs.
Mm-hmm.
Um, but if I see a fat pitch, I'll swing for the fences sometimes. But I generally try to take very little risk and catch small winners, you know. Um, and if something's going my way, I don't necessarily get out just because it's a little my way. I'll leave it on and put a stop in the market, try and make it into a bigger winner. But generally, I'm just trying to get in and out. I day trade. I do take stuff overnight, but generally, I'm looking to get in and out quick, capitalizing on like extreme moves, exhaustion, and extension.
Mm-hmm. All right. And so this is kind of my opening question for every trader I have on this program. So I'll ask you now, how would you grade your week of trading so far? So we're halfway through the week, Wednesday. So give me your grade on your typical school grading scale, an A through an F, and why?
Oh boy, this week I give myself a C+ so far.
Okay.
Um, and after yesterday, I would have given myself an A.
Hmm.
But I really didn't see today's selling coming. I just didn't. Um, it the violent selling I saw today, I expected yesterday on lows. I expected that to continue. That bounce in
Mm-hmm.
the afternoon kind of told me that, the Fitch and the Moody's downgrades, any fear ahead of CPI was already digested by the market, and we were starting to bounce back up like we always seem to since, I don't know, last October.
Hmm.
Um, so I was pretty surprised to see the selling today, and the fact that I stayed in some longs way too long today, even when it was violating some of the levels I knew it shouldn't have. That's why I give myself a pretty bad grade. Let's
Hmm.
downgrade it C+ to a D this week. maybe it'll
Okay.
get better by the end of the week. But I didn't manage risk today very well, and that's the name of
Mm.
the game.
When you look at a session like today where you say you didn't manage risk well, you let some of your rules get violated, how do you take what happened today and kind of reassess for the next session and, take a new approach to tomorrow versus carrying that over?
Yeah, good question. That to me, the approach doesn't change. It's always the same. Like
Mm-hmm.
the first rule is manage your risk.
Mm-hmm.
You know, I've had I have some friends that are great traders, like fantastic traders. And as far as like how often they're right and how often they're wrong compared to me or compared to anyone else, it's about the same. It's what you
Mm-hmm.
do when you're wrong or what you do when you're right. So to me, as long as you have some system of risk management and you're disciplined and sticking to it,
Mm-hmm.
you'll be fine. Like you'll have your winners and you'll get out of your losers when you're supposed to. Today I didn't. A good example is Palantir. I was long it versus 16 today. When it broke below 16, I should have been out. Nothing to do with the earnings report the other day, nothing to do with analysts reports, nothing to do with anything. That's the level I said I was getting out at.
Mm-hmm.
Once it violates that, you got to get out. And I didn't. And that's a lesson you learn on day one of trading. And every once in a while, I have to relearn it. So
Yeah.
the approach is still the same tomorrow. And you just got to hope you don't break discipline.
Hmm. The big news of this week is, of course, tomorrow with the July CPI coming out in the morning, 8:30 a.m. Eastern. So walk me through your process for a big trading day like tomorrow when important data is coming out ahead of the open.
Uh, on a macro level, I look at where the market and where the economy is. Just reading in the past 2 days, I saw, you know, credit card balances are the highest in
Mm.
50 years, and
Over 1
interest rates are
trillion
the
for the
highest.
first time ever.
Yeah, interest
Yeah.
rates are the highest since, at least the 80s. Car loans are an all-time high. Uh, and then I juxtapose that with what's going on in the market, like these volatility control funds that sort of, as vol gets pushed down, they add exposure. They're in
Mm-hmm.
the 96th percentile of long exposure, meaning if we start ticking down for because of these other reasons, like they're forced sellers as vol increases as we go down. Uh, you know, QT quantitative tightening is not going to stop. At least they're not going to lower rates anytime soon. Like I
Right.
believe Powell when he says we're getting to 2%. He repeats it every meeting, for over a year.
Mm-hmm.
And when I put all that together, plus these ratings agencies downgrades, I think that if we surprise on the hot side and we get a real hot reading, I think they're expecting month over month like 0.2 and
Mm-hmm.
year
They're
over year.
expecting
I
a
don't
little
know.
tick up in the year over year to like 3.3. It was 3 last month,
Yeah, so
June.
if it comes in hotter than that with all these other things going on, I think we can see, an acceleration even of the selling today. And
Mm.
so, when you ask how I approach it, I keep all that in mind. And then I have my technical levels in mind that I'm looking at, and I say, hopefully I stay disciplined, unlike today. But if it violates those levels and trades below it, I have to get out of stuff, um, and maybe flip short there. Uh,
Mm-hmm.
but again, the the approach is always the same. Uh,
Mm.
this report is no different than some earnings report or anything else. It's going to affect the market instead of just a single stock. But as long as I stay disciplined, I'll be fine.
We talked a little bit, or you mentioned a little bit, the economist expectations for the print tomorrow. But what are your kind of personal expectations for the CPI tomorrow morning?
I, you know, I, the year over year always seems to be in line, and the month over month, you know, like some of these monthly prints going back a year, like the
Mm-hmm.
big ones when we were having big inflation prints, are starting
Mm-hmm.
to fall off. So, I think that wild variation is gone, and they're getting much better at predicting these inflation reports. So I see it coming in line. I, the question is, what's the Fed going to do, right?
Mm-hmm.
How long are they going to leave these interest rates high? I believe him when he says they're going to leave it until we start seeing 2%.
Yeah.
And then going back to all these other conditions in the economy, if they're going to leave rates for this high, how long can people pay these rates on high credit card bills? How long can they pay these
Mm-hmm.
high car loans? If you have
Mm-hmm.
a variable mortgage, luckily I think most people are locked into low rates that have a mortgage.
Mm-hmm.
But the ones that still have variables, how are they going to manage? And then, you know, also at some point, like these analysts have these high interest rates plugged into their models, but I do think they assume that these rates are going to start going down. They look past what these models are telling them, and that's why we
Yeah.
see these high PE levels still, or at least traders look past it. Maybe not
Yeah.
analysts. And
Yeah.
how long before people start saying, what, these PEs are inflated, like these discount rates are going to stay high, and it's time to get out of some of this stuff. So as I say this, I've been saying this, you know, last October, I got stopped out of a Facebook long below $100. Where's it now? It's tripled or
Mm-hmm.
more, like,
Do you think the
so
market's a little out of touch, out of balance with, they always say like Wall Street and Main Street aren't always connected. Do you think the market's a little out of touch with what's really happening with the economy?
no, I think the market's usually right.
Mm.
I think the market was right. When it bottomed in October, I didn't see it right away, but I think it's been right in this rally. And you've seen since last
Mm.
October, like inflation has come meaningfully down.
Yeah.
The job market's still great. Um, you know, Real estate, for better or worse, for some people, everywhere I'm looking is still on all-time highs. I know there's pockets of weakness, but
Yeah.
you know, me, me and my wife were looking to buy a house for all year last year. Everywhere we looked was on record highs. Like,
Yeah. We bought a house
uh,
last year and one just sold down the street for more than we
yeah.
bought ours
So,
for. So,
I think, I'm not going to minimize the squeeze of inflation on people's pocketbooks, but it sure seems like the economy's humming along just fine. So
hmm
I think the market was right when it started rallying in October, November. And, now maybe it's gotten a little ahead of itself, but as they say, it climbs a wall of worry. So even though
yeah.
I listed all those credit stats that we all know,
Mm.
and all these rate shocks that we all know about, the markets, it, earnings season's a good case in point, right? Like, earnings season was pretty good.
hmm
I know expectations were muted, but from what I saw, they were pretty good. You had some names sell off pretty hard on good reports.
Yeah.
Back to Palantir on that one. I think it sold off over 20%, and the report looked good. But
Yeah.
that was, another one. It's up over 100% in a couple months. So
Mm.
maybe it's just some people taking profit. I think the market's right. I think the economy's fine, and you know everything that we're worried about it's already in the market, right? It's already discounted.
Yeah.
So what's the next catalyst to drive it back to all-time highs? I don't know. Nobody saw this ratings downgrade coming from these two ratings agencies. That was out of
hmm
left field to me.
Yeah.
So it's never what you expect, right?
Yeah. Let's talk a little more about those ratings downgrades. Start off with Fitch downgrading the U.S. credit rating. We went from perfect AAA to AA plus. How much do you think that does actually signal about the strength of the U.S. economy uh, at this time?
Uh, I, so I read the report. I don't disagree with what they wrote.
hmm
I'm sure their economists are much smarter than me. I just don't see why these downgrades were. I don't know if Moody issued a formal downgrade on the U.S. It was just a few regional
It's
banks,
just on
right?
the banks, yeah.
Yeah. So Fitch, I just don't see what changed, from the day before.
Yeah.
Like, if you're going to talk, they got into some government dysfunction. Is that new? Really? Um,
Yeah.
so I just think the timing was surprising. I don't think there was any, ill intent on their part. I just think it was a strange place to issue that report, being that I didn't see anything change dramatically. It's not like they do this regularly, right? Like, what was this, the second time they've done it in, I don't have the stat in front of me, but like in 20 years? Like, so you'd think like something really substantial happened, or I would have thought, for them to do this. And again, I'm not saying it's wrong. It just seems strange that they would do it at that time.
Mm.
And so again, back to how I'm approaching CPI tomorrow, like I'm not really bullish until we take out the highs of that Fitch downgrade session when we gapped
Mm.
lower that next day. Like the high of that
Yeah.
day, whatever day that was last week, is really important to me.
Mm.
And like, you know, I'd say the market's kind of in the penalty box, as Derek Oldensmith likes to say,
Yeah.
until that high is taken out in the market.
On a day like tomorrow, when you're kind of watching the reaction to the print uh, pre-market, so the print comes out 8:30, so you got an hour before the market actually opens. What are the trends that you're watching for to decide how you want to position yourself in that trading day?
But before the print, I'm looking at like bigger levels in the
After the
market.
print, though, when the print comes out at
Oh,
8:30
after
and
the
you have
print.
that hour in that pre-market session, what are you kind of watching trend wise to decide where you're going to position yourself?
Yeah, it could be tricky, right? Like a lot of people
Mm-hmm.
say, always fade the first move after CPI. I don't see that as being a real trend. I've seen all kinds of action. 8:30 to 9:30 is really tough. Number one, it's
Mm-hmm.
really hard to manage risk because you can't enter stops.
Right.
Um, so that makes it very hard because it's also much thinner because some people can't trade before 9:30. Some
Mm.
funds don't trade before 9:30 as a rule.
Right.
So because of those two things, illiquidity and the fact that you can't enter a stop, like you may have a level that you're going to get out. Like let's say I see, I don't know, I'm going to buy Tesla if it trades down to 430. What I don't even know where it's trading today, and it gets there and I buy some, and I say, I'm getting out if it trades down to 425. It may be trading 427 and fly through 25 and be trading 420. So it's before you
Yeah.
can even enter your sales to get out. So you just have to really be ready for illiquidity and bigger moves
Mm.
before 9:30. And like I'm really careful before 9:30 on a Fed day. I'll trade, but
Mm-hmm.
I usually trade pretty small.
Mm. And then come the
And I
open,
look to
or
see,
is that kind of your busiest hour of trading, like right after the open, or?
yeah, no doubt, no doubt. I
Mm-hmm.
like to see what the opening range is. I like to see a 5-minute opening range, a 15-minute opening range, and a first hour opening range. And I look at those highs and lows as pretty important milestones on where the money's going from there.
Mm-hmm.
Um, coupled with volume.
Yeah.
So certainly the first 5 to 10 minutes, I like to see what stocks are getting real volume. And on a day like tomorrow, the whole market will be in play. Uh,
Yeah.
so so yeah, careful before 9:30, and then maybe lean in a little more afterwards.
Mm-hmm. For you personally, are you more of a day or a swing trader or combo?
Uh, a combo, like I seem to make the most money day trading.
Mm-hmm.
Um, and like you know overnight, I think as much as this rally, like I look at this rally for the past close to a year almost, and like for some reason I think back to like 2021, and it seemed like so much of the money was made overnight. Like my overnight positions seem to really catch a lot of big moves higher. This rally, for some reason, I haven't caught very many good overnight gaps higher. So lately, it's been more of a day trading market for me. Um, but I'll do both. I like I'll if I'm doing a long-term position, sometimes I'll just put options on. Um, and CPI, I don't have anything on right now, but CPI is another good example of a time I put on some call spreads or put spreads if I had a real directional opinion.
Mm-hmm.
Because that way, at least you can define your risk de facto, like if I'm paying X for a call spread, that's all I can lose. And even if even my discipline goes out the window, if that thing expires worthless, that's all I'm going to lose. So,
Right.
Often big market events, I'll use options to play it, so I don't get shaken out in the equities. The equities have these big swings. Your stops get set off, then the next thing you know, it comes right back, and you get chopped around. I'm less likely to get chopped around in options.
Right. Let's go back to the Fed and the CPI. This data is, of course, as you mentioned, key for the Fed's next steps. Is key for the Fed's next steps with the central bank previously saying, as you've mentioned, they're going to remain data dependent for the September meeting. So kind of September meeting is open for anything, kind of what Powell said last time. They might hike, they might not. The CME Group FedWatch tool, though, is currently showing over 86% of traders expecting no rate hike, leaving rates unchanged, maybe in a really small chance that like 13.5% of a 25 basis point hike. So what are your thoughts? Do you think we'll get another hike or just stay where we're at?
I think we'll get one more hike. Uh, unless the next set of data show wages cooling off a little and the employment picture sort of softening a bit.
No recent data shows. I mean, the jobs report, I guess, was a little light. But I mean, if you look at the weekly unemployment data, there's no cooling happening.
No. So I expect at least one more raise. And again, I think that they've been really aggressive. I think the Fed, other than being slow to start raising, people were screaming at them to start raising, and they dragged their feet. But since then, I think they've done a really good job at raising rates without, I don't know if it's them or just the market itself, but they've raised rates a lot, aggressively, and they really haven't broken anything. But I think they've been wise to be somewhat careful. As aggressive as they've been, they haven't really, I remember at one point a few months back, people were saying, raise by a full 100 basis point, and they backed off on that, and they were raising, half point, a quarter point. Like, I think they've done a great job, and I think the question now is how long are they going to leave these rates high?
Yeah.
And if they are too late going out, to lowering the way they were raising, then I think they could really do some real damage. And then once that spiral of the economy starts, it's hard to get us out, right? But I trust Powell. I think he's done a good job. I think he has been data dependent, even though they were a few months slow. They were buying Apple bonds, which I still find hysterical.
We heard that word transitory for about 6 months too long.
Yeah. And I don't think Apple needs a loan. They have so much cash, they literally don't know what to do with it. So I always found that confusing, why they were still buying some of these companies' bonds. But again, I think they've done a good job. I think that they've been good stewards of the economy thus far, and it's easy for me to sit here and say, oh, they should have done this, they should have done that. They have the data they look at, right? It's on a lag, we know that, and it is what it is.
For the market as a whole, what would you say are the key levels that you're currently monitoring?
So I look at SPY and Qs. So I apologize to anyone that trades S&Ps or futures. But in the SPY, I like to the downside. I think 445 is a big level. I think 430 is a big level below that. And again, those highs from that Fitch sell-off day, that gap down, which in the SPY I think is 453, 50-ish, and in the Qs that high is somewhere around 380. And then the Qs on the downside 365-ish. If you're asking about technical levels,
right? Yeah.
And just like the market was taking out upside resistance without much resistance at all on this rally higher, just grinded right through it. In the past few days, some of these levels just get violated. And there's no bounce at all. So,
Mm-hmm.
I think people have to be careful. And if we do, let's say there's a hot print tomorrow and the market sells off hard. If we start getting to some of these big levels of support, I would
Mm-hmm.
not buy into it as the market's selling off. I'd wait for the market to put in a pivot low so that at least you have a
Mm-hmm.
level to work against on the downside and you
Mm-hmm.
can define your risk. Uh,
Right.
Another mistake I make sometimes is not doing that and saying, "Oh,
Mm-hmm.
this is my level." You know, I like I like SPY at 445, and then I just buy a ton of SPY when it gets down to 445, and all of a sudden I realize I didn't ask the most important question in trading, which is before you click buy or sell, you need to know, where am I getting out if this goes against
Yeah.
me, right? You
Mm-hmm.
can't make a trade unless you answer that question.
Yeah.
And sometimes I still click buy without answering the question. And I'm literally staring at the screen saying, why did I do this again? So,
Oh, a lot of traders can get in trouble, you know, chasing a trend that hasn't been kind of solidified yet. You see a downtrend starting to happen, but like you mentioned, you're not getting that pivot low to work against yet. What are your kind of rules as a trader to avoid yourself getting kind of caught up in that?
um, so if I'm trying to follow a trend, uh, basically I'm going to wait for pullbacks. So if there's a trend happening, I'm obviously not, and I'm looking to get in, I'm not in yet. I'm going to wait for some type of pullback, usually to some type of moving average. I
Mm-hmm.
like the eight exponential
Mm-hmm.
moving average on all different time frames. I like the 21 exponential moving average on all different time frames. So I'll wait for pullbacks to those averages and wait for the market to sort of bounce off that, or the stock to bounce off that. And I'll use that pivot low to stay in it. I can get, as long as I'm managing risk, I can get stopped out 5, 6 times. As long as
Mm-hmm.
I'm taking small risks, I'm okay. Because eventually, if that trend continues, right, and trends usually continue, you'll catch it for a bigger move.
Right.
When I'm looking for reversals, I have to be much more careful,
Right.
um, which is tricky because anyone that's a technical analyst, right, anyone that reads charts knows, you know, there's, it seems like there's 100 reversal signals, but there's like 2 continuation signal. So it's
Yeah.
that's why we find ourselves trying to catch these reversals.
Mm-hmm.
And so I try to be mindful on the reversals, wait for the bounce, wait to see a pivot low, wait for some volume to confirm it, to say that, hey, there's other people interested in buying here, right?
Mm-hmm.
Like
Right.
Palantir, that 16 level. The other day, I bought it there right after earnings. I looked at that earnings, I looked at it for 10 seconds right when they came
Mm-hmm.
out. And I saw a beat top and bottom line. And I saw the guidance looked okay. So it traded all the way down to 16. I bought it there as it started bouncing because I saw huge volume come in, right? So
Right.
I'm saying, all right, there's other people with money, like maybe hopefully institutional traders that think this is a level too, and they're going to support my buys. And they did, it worked. Today, I said earlier, like that 16 was a big level to me. I should
Yeah.
not have been long after it broke through 16 for the exact same reason. That
Mm-hmm.
support is no longer support. There was no buyers there,
Mm-hmm.
but I stayed in. So yeah, just look for pivots on reversals with volume, and and look for small pullbacks that bounce to confirm trend. And as long as you manage your risk, you'll be fine.
And talk about your profit taking strategy. Are you a trim and trailer when you're trading?
I do like to trim and trail. I like
Mm-hmm.
to, um, you know, a lot. And I learned this T3. I'd been trading, when I got to T3, I was trading almost 20 years, and I never used that strategy. And I really like it. I love having a
Mm-hmm.
trade on where once I've sold enough and taken enough profit, that if I get stopped, if it goes all the way back down to my initial stop and I get stopped out, the
Mm-hmm.
worst case is I break even.
Right.
Um, and I never traded like that till T3. I learned that here. Um, so I do like to trim and trail to a point, and
Mm-hmm.
then I leave it, and I'll raise my stop as long as it goes in my favor. And eventually, hopefully, your worst case scenario is you're still making money. So,
Right.
those are the best trades, no doubt, where you trim and trail, and then you keep like a core position and ride a winner for a while.
Let's go to an audience question from Frank. He asked if you trade futures at T3 given your background.
Not anymore. I don't. I found that um, at least the futures I traded, natural gas futures, it's
Mm-hmm.
a real thin market.
Mm-hmm.
Um, and just trading on the screen blind, you don't see the full picture. I'm
Yeah.
not saying we see the full picture when I'm looking at a level two, but in commodities, I think there's such a big part of the market that's over the counter and that's on other
Mm.
exchanges, and even other countries now that 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 you're almost trading blind if you're just staring at a screen uh, and trading in and out of futures. And it's a real thin market.
Mm.
Um, I loved it while I was trading in the pit. We had a lot of edge, informational and geographic. Um, when I'm trading on the screen now in commodities, I have no edge, and the illiquidity makes it really hard to manage risk.
Mm. Right.
Um, there's gaps and vacuums in those markets that are, I can complain now about certain stock illiquidity. It's nothing compared to commodity futures when you get caught in those vacuums.
Yeah.
Um,
I, you talk about how you started trading in the pits, commodities, and then you eventually got into equities. What were the lessons you learned from those, really early days of trading that you still carry with you to now in your trading?
um, I learned how to trade um, from some great commodity traders. Uh, there's a pretty famous guy named Mark Fisher who was my boss,
Mm.
uh, and I was a summer intern, and he said
Wow.
this business doesn't have much to do with intelligence. This business has nothing to do with who you know. It's all about can you get out of your losers and do you know where you're getting out? Like I said before you buy or sell anything, do you know where you're getting out?
Mm.
Um, and 20 years later, it's still true. And that's the
Right.
most important lesson any trader can learn, no matter where they come from.
Mm.
Um, have a system that's repeatable and systematic. A system that's systematic. Have a system that's repeatable to manage your
Right.
risks, and use it as if your life depends on it. And
Mm.
don't deviate, and you'll be fine. Um, again, whether it's commodities or stocks, I know people that didn't graduate high school
Mm-hmm.
and make millions and millions of dollars. And I know guys that went to Harvard or MIT, but they can't manage their risk and they lose all their money and everything in between.
Mm. How would you describe the current market sentiment and action?
I, you know, I, that's a really good question because I think that so much of this rally over the past few months was built on such negative sentiment. I mean,
Yeah.
everybody was waiting for, but you watch television, you read any financial press, every big fund is waiting for this pullback that never materialized,
Mm-hmm.
and they gave 50 reasons to be bearish, and zero reasons to be bullish.
Mm-hmm.
And the market, again, climbs walls of worry. And it trucked up higher on that negative sentiment so mechanically and so consistently. And now, all of a sudden, interestingly, right before those Fitch downgrades, you started to hear a lot of these people, throw in
Say
the
they were
towel and
wrong.
say, you know what, there's not going to be a recession. Like
Mm-hmm.
not only is there, now I see people saying not only is there going to be no recession, like they see an expansion over the next year and a half, which first time I've seen people say that.
I know.
So, you know, now maybe people actually are back in the market and maybe getting caught a little off sides with this move down. I'll go back to that. You know, I can pull out so many bullish and so many bearish stats. On the bullish side, you look at the cash positions of some of these funds and of the country in general in like money markets is at all-time highs, right?
Mm-hmm.
So, there's still money that needs to be plowed into these into these markets. Where else you going, right?
Mm-hmm. Yeah.
So I, I think long term, I'm bullish. And depending on this number tomorrow, maybe we sell off a few more days. But I think there's still a lot of money waiting to get into this market. They missed a big rally, and they're
Mm.
going to be buyers on every big pullback.
Yeah. You said the dip today, the not dip, it was much more than a dip today, but the selling today was a bit of a surprise to you after yesterday's session. Would you say the market action is a little bit chaotic over the past kind of few sessions?
I think it's August. Liquidity,
Mm, yeah.
liquidity's tough this time of year. And again, like I mentioned earlier, that some of these funds use use volatility as a factor in whether they're buying or selling.
Hmm.
And if the market's selling off hard today, right, and vol's going up, they just start selling
Yeah.
mechanically. Like, they don't care why it's going down or anything. They just start selling. And when
Hmm.
there's no liquidity to suck up that selling, the market gets pounded and selling, and you know how that, like, then other people start. So I just think
Selling
today was
leads
one
to
of these,
selling.
yeah, it was
Yeah.
just a lack of liquidity at certain points, breaking through technical levels at others. And and again, if you're looking to step into the market, if you have a lot of money to deploy, maybe you're saying, you know what, I'm going to wait to see what CPI does anyway. Like, let's not exactly jump in right here. But yeah,
Yeah.
again, it caught me off guard. I'd love to know exactly who sold hard today and why, other than those funds that were forced to.
Hmm.
But you don't get to know. You don't get the
No,
playbook at the end of the
no
day,
one gets to know.
unfortunately.
Derek wants to know your best or funniest story from trading in the pit.
Oh, uh, well, so this will be a good example of, and I just told this story recently, I think at T3, but it was my first week, um, and I was young, and they sent me. They used to do these things called cash runs, where
Hmm.
before the weekend, traders would ask the clearinghouse, which is like a bank where they have their trading accounts, for
Hmm.
money for the weekend.
Hmm.
Um, and you'd go downstairs to the bank and get the cash and bring it up like an ATM. So, again, it's my first week. I'm a summer intern, and they send me downstairs with a slip of paper, and they're like, hand this to the teller at the bank downstairs. This is in the World Trade Center. So there's tens of thousands of people walking around. I'm in
Hmm.
line at the bank. There's people behind me, and I hand this guy a slip. And I'm watching this guy count out money, putting it in the electric counter, making stacks and stacks of hundreds. And he puts it in a big middle envelope, gives me a slip to sign. There was, I think, $35,000 in cash in the envelope. And
Hmm.
I said, I'm not taking this. Like, I went back upstairs because I thought they were playing a joke on me. And I
Hmm.
said, the guy tried to give me $35,000 in cash. And they were like, yeah, that's what you're supposed to do.
Yeah.
Like, everybody needs their cash for the weekend. So I went back down and got the cash and went back upstairs, walking through, you know, the 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 atrium of the World Trade Center with a
Right.
billion
Yeah.
people with 35,000 in cash on my first week on the NYMEX.
That I'm
So
sure
yeah,
that became kind of
different
a
times.
norm moving forward
Yeah,
on
there was no
Friday.
Venmo, no Venmo.
No.
Everybody needed
No.
cash.
Yeah. Um, what stocks would you say you're in, maybe not individual stocks, but sectors, et cetera, are you bullish on right now and why?
I'll give you a stock if you don't mind.
Yeah, give it to me.
I'm very bullish on Penn Gaming.
Okay.
Uh, and I did not love the performance on Good News the other day that they're partnering with ESPN on a gambling site, and
Mm-hmm.
they sold it hard right off, which is never a great sign.
Mm-hmm.
But I hadn't looked at Penn's financials, like their balance sheet and their financial statements in forever. And when I looked after that news came out, I was amazed. This is a really good company. Like, they have some debt, but I think they have a price to free cash flow of 8. That's a value stock. They make money consistently.
Mm-hmm.
Uh, so I love this company. I didn't get to listen to the Disney conference call because I've been on with you. I
Yeah.
know Disney came out with earnings. I'm guessing they're going to mention this ESPN deal with
Yeah.
Penn
I was
Gaming.
thinking about that.
Maybe
Yeah.
that'll give it a little juice. But But I really like Penn going forward, not just because of this news. It looks really good to me from a
Hmm.
value perspective.
Yeah.
Yeah, and if I'm going broader sector wise, uh, I still like tech.
Mm.
I would love for big tech to pull back harder uh, and buy some of that and like put it in a retirement fund. I don't think
Mm.
Apple and Google are going
Hmm.
anywhere. And again, I go back to my getting stopped out in October from Facebook. Um, you know, there's not many people that sold Facebook under 100. I'm one of them. I'm not doing it again. So
Mm.
I know it's not there. I know that the market's rallied a lot since then, but
Yeah.
if the market happens to pull back big, I'm a buyer of big
Big tech.
fang tech.
Mm. You mentioned how, you looked at Penn and you saw their balance sheet and their financials, their fundamentals looking good. Do you like to do your research on a company, the fundamentals of the company, and know the company before you're trading one?
Almost never.
Okay.
Um, I trade much better when I just focus on the technicals because the
Right.
technicals are going to tell you if the financials are good, right?
Mm-hmm.
Because they'll be smart, big money buying it through levels that you're looking at. So like if there's a big level through which you want to buy to the upside, it's getting through that resistance for some reason, right? Now it might be
Mm-hmm.
just a momentum trade or people that are short are getting stopped out above there, and then it'll retrace quickly. But on stocks, again, like big tech, when it's taking out big resistance, it's big money taking it up through there. You don't even need to know what's going on the balance sheet or the financial, the income statement. The
Mm-hmm.
chart's going to tell you it's good. Um,
Mm-hmm.
that said, I did take, sometimes I do like to put the two together, and you get some really good trades when the technicals and the fundamentals agree with each other. I
Right.
think Penn's going to end up being one of those, but and that today's selling was just maybe some people have been long it, and this gap higher, they said, you know what, I'm taking some off the table. And again, on an illiquid day like today, it's sold off pretty hard from the open. It's still up a lot on the day. Um, but we'll see. Like that's a stock I'm going to watch. I have a position in it, but I'll watch it very closely tomorrow, seeing how it handles today's lows and the level from which it gapped up.
Hmm. We'll go back to the audience questions. Gillis says Palantir bought like 7% stock of RBT. So that's Rubicon Technologies. RBT is the ticker. And the stock went up today, though, down. What might your thoughts be if you have any on that?
On that acquisition,
Mm-hmm.
I'm not going to lie. I can't speak to the details on that acquisition.
Okay,
Um,
no worries.
yeah, yeah. Sorry, Gillis.
He has another question, though, for you as well. He asked if you think this sell off will continue until mid September.
In the market or
Mm-hmm.
in Palantir?
I think in the market and just overall.
I don't. Um,
Okay.
and I almost don't even care with I'm within reason. I'm not too concerned about tomorrow's CPI report. Now,
Mm-hmm.
if it comes in super hot, crazy, okay. But if it's slightly hot or whatever, and the market sells off, I don't think the market's going to sell off too much. I don't think, I was listening to some commentator somewhere reading an article where they're concerned about bond volatility and this Fitch downgrade, and the counterpoint I think is how much U.S. Treasuries can people really dump? Where are they going? There's no market that can absorb liquidity. You're not gonna buy Chinese bonds or German bonds to take the place of your U.S. Treasuries on your balance sheet. No one
Mm-hmm.
can absorb that liquidity. So I'm not saying bonds can't get hit a little, but there's a point at which there's going to be a ton of buyers coming in at different levels because there's nowhere else to go.
Mm-hmm.
So, if you tell me there's going to be hot CPI and they're going to raise rates, yes, the market will come off. But I think treasuries are, if not topped out, close to a top because there's
Mm-hmm.
just so many people that have to buy them.
That's true. Yeah, definitely. Okay, so we talked about the stocks that you're feeling bullish on right now. So we'll go on the other end of that. What stocks or sectors are you feeling more bearish about and why?
Um, More bearish about, I guess some of these companies. I don't think we're going to see the rallies in these companies that have never been profitable, don't have a
Mm-hmm.
lot of revenue, like we saw in 2021. I think those
Right.
days are over, where you
Mm.
saw stocks, go from 50 to 400, or insane moves
Right.
on the promise of future. I think stocks are going to have to prove somewhat that they can grow revenue consistently and
Mm-hmm.
head towards some type of profitability. I don't. I think so. So that growthy tech that's just like, you know lacking revenue with no plan on profits,
Mm-hmm.
other than short squeezes, I stay away from those now. I don't even have them on my screen.
Mm-hmm.
Fubo, Jumia, even GameStop. I haven't pulled those up. I don't care if I see news about them. Don't
Mm-hmm.
look at them. Although I should say I was long AMC the other day for a couple minutes.
Yeah,
Um,
I mean, the Barbie movie, right?
well, so I pulled up the short interest, and I think it was like still 30%. And I
Mm-hmm.
said, okay, I'll buy this off the open, right? Like first good news I've seen on AMC, straight down. But
Mm-hmm.
that was a trade where I lost money, and I'm happy with the trade because I
Right.
stayed disciplined. I
Mm-hmm.
said, I'm buying it here. Here's where I'm getting out, because this is going to show me that there's no momentum to the upside. Like, I'm looking for short covering in that trade. Didn't
Mm-hmm.
get it. So they sold it right off. I was out, took the loss, move on.
Right.
Um, I'll, you know, a lot of times people ask me, like, what was your best trade of the day? What was your worst trade of the day? I can honestly say, if I was talking to a beginner trader, that was my favorite trade of the day, because I stuck
Mm.
to my plan. I don't
Right.
care that I lost money,
What makes a good or bad
because I
trade isn't
stayed.
necessarily making or losing money. It's if you followed your rules and your strategy and all of that.
Yeah. So going back to my first days on the NYMEX, um, that that gentleman, Mark Fisher, said to me, and he's right. It took me a long time to understand what he meant. Because I was asking him, like, how do I come up with a system on how do I know when to buy and when to sell? And he goes, I'll tell you what, Brandt. He goes, I can make a system up. He goes, I can come in every Monday and get long, and come in every Tuesday and get short. He goes, and as long as I stay disciplined, I bet I make money. And
Mm.
he goes, and you could come up with some, you know, PhD's system of trading and picking stocks and selling commodities. He goes, but if you can't manage your risk, you're going to lose money. And it took me a
Right.
long time to understand what he meant. And he's right. Um, so I don't get so hung up on you know what CPI is going to say tomorrow, or what the big levels are. I keep an eye on it, obviously, and obviously I'm going to be paying attention. Um, I I pay attention to how much do I have to risk to get into this trade, and can I get paid back enough to make that worthwhile, right? So like
Mm-hmm.
Tesla, Tesla's a volatile stock, right? It has $10 moves all the time.
Yeah.
I'll risk a dollar. I'll risk a dollar to make five in Tesla,
Mm-hmm.
but in AMC, I'm not going to risk a dollar in AMC. It's a
Mm-mm.
cheap stock, and even though it on a percentage basis, it's probably as volatile, but risking a dollar to try to make five in AMC is probably not very smart. Risking a
Right.
dollar in Palantir to make five is probably not very smart. So it also, when I look at how much I'm risking, it's stock dependent, price dependent, and obviously sizing always
Mm.
matters.
Gillis asked another question about Palantir. He said Palantir 16 is now resistance and support is around 1350-14. Do you think these will be good bounce points?
I think 16 is really important. I think it did
Mm-hmm.
a lot of volume there. I think until it gets above 16, uh, you know, we should be out. I'm not. I hope he is. Um, but as far as, hold on, I'm going to pull up a daily right now,
Yeah, go for it.
and yeah, I think to the downside he's right. Around 1350 is your next level, and again, that's too much to risk, right? We should not be risking $1.50 on.
There you go.
Yeah. Sorry, I lost you for a
It's
second.
okay.
We should
You're good.
not be risking down to $13.50 from $15 ish on Palantir. It's too much,
Mm,
and that's what happens when you're not disciplined, like I've been in this trade. The
mm-hmm,
next level, it's not like the next level down is, 10 cents away guaranteed. Here, it's really $1.50 away is that next pivot low on the daily. So if
mm-hmm,
I'm trading this properly from here, I have to risk $1.50. That's 10%.
mm-hmm,
I like Palantir, but I don't like it that much. And so here's an example of where, a break in your discipline and abandoning your risk management doesn't just cost you a little more. Like this could potentially be a big losing trade for me tomorrow,
mm-hmm.
if I trade it properly. Because again, if I trade it properly from now, 1350 should be my number. Now I can use today's low, uh, but I don't think today's low is particularly significant.
Mm.
Um, so if he's long with me, sorry to hear it. Uh, and we'll see how it turns out tomorrow. But yeah, 1350 unfortunately is our level to the downside.
Mm. Eddie wants to know about your opinion on options trading habits. He said, you mentioned the risk management discipline, which is the key to trading. What do you think some other bad habits the options traders should learn to avoid?
I think so. I think options traders make make a couple mistakes, and any mistake I mention, I'm often guilty of. Number one, they look at cheap options and they say, "Well, it's cheap. I'm going to buy it." Just because an option's cheap doesn't mean you should take a shot on it. And that usually happens in front of a binary event. People will buy some way out of the money call, lotto call.
Mm-hmm.
And I think you could really bleed yourself dry buying those lottos too consistently, if you don't have a good basis for it. I think options traders make another mistake that they don't understand option dynamics. I think it's important to understand how options live and breathe, how the price changes, what the Greeks are, what's the delta mean. You know,
Mm-hmm.
people talk all the time about gamma squeezes and stuff. What does that mean, right? If you don't
So
understand it,
while
I
wait,
don't
while
think
you're
you'll
right
know how to
here, while you're here, Eddie asked a follow up that goes perfectly with what you're talking about. He wants to know what is the key Greek that could be the key to monitoring the positional risk in the portfolio. So while you're
To
talking
me,
about
it's
knowing the
gamma.
Greeks, okay.
To me, it's gamma because gamma tells you how much this thing's going to blow up in your face or not if it goes against you, especially
Yeah.
from the short side, right?
Mm-hmm.
So people often look at the delta and they say, well, the price of this option is only going to change 10 cents if this market rallies $1. But the delta is going to change based on your gamma and based on your volatility.
Mm-hmm.
And, you know, uh, besides buying cheap options, I think a lot of people get hooked on selling options and thinking this premium that they're collecting is so easy, right? And they don't understand how these things can blow up in their face. Once you understand gamma and how the price of an option changes with the price of the underlying, you'll see that that the that these calls that you're selling or even call spreads that you're selling can really explode on you. And as an example, I've never I rarely, I said buying cheap options can bleed you dry over time. If I'm being honest, I don't know too many people that have blown out of the business buying cheap options. I know a lot of people that have blown out selling options because they didn't understand their risk and they didn't understand the Greeks. So I would say buy like a simple, you know, idiot's guide to trading options or one of those introductory books. All you have to understand is how this option price can change.
Mm-hmm.
And I'd say all the Greeks are important. They're in different market conditions, different ones are important. Depending on when your expiration is, it's
Right.
going to be, if it's the day of expiration, Vega's not going to be that important. If you're buying an option a year out, Vega's going to be really important.
Mm-hmm.
But gamma is what gets people in trouble, and that's all about. You can look at the underlying in your level too, and you see how the price changes because you're just watching it. I know that if Apple rallies $1, Apple's going to be $1 higher. Understanding what the price of that option you own or are short how it's going to change and why, you can't manage your risk without that. I think too many traders get
Mm,
involved in it without understanding how to manage that risk. And they let, from the long side, they'll let options. They say, well, I bought a cheap option. I bought it for 20 cents and I didn't buy that many of them. So I'm going to
mm,
they let it expire worthless. Why? You wouldn't let a stock expire worthless. So I
right.
think that we should have levels, maybe based on the underlying, where you're getting out of certain options positions, just like you get out of stocks. You can't let every option you're long just go to zero if you're going to be trading them consistently. I don't think.
True. Uh, do you operate when it comes to risk management on kind of a set percentage stop loss, or are you choosing, dollar amounts based on the stock that you're trading?
Neither one. I
Okay.
trade. I manage my risk based on the pivot points on the chart.
Okay.
Um, and I will use percentages based on how much I'm willing to risk. Again, let's go back to the Tesla versus Palantir
Mm-hmm.
example.
Mm-hmm.
Um, so I'll look at a pivot low, and if it's $1 away in Tesla, I still may enter the trade. Okay, I'll risk $1 here because that's where the pivot low is, and that's where volume came in to buy it.
Mm-hmm.
And it's off support, it's off a moving average, and whatever else. The more, as they say, layers of probability you have working in your favor, I think the better case you have to take a trade and risk whatever you're risking. But that same trick, if I see AMC, a ton of volume coming in, it rallies $1, I'm late. I'm not risking that dollar to that last pivot low. I missed the trade.
Mm-hmm.
So I don't look at percentages. I know there's a lot of great traders that do. It's just not how I do it. I,
Right.
I like to look at, um, how much money am I willing to risk on a dollar basis based on how this stock trades?
Hmm. We're coming up here on the end, so I just want you to talk a little bit about how trading with T3 has changed your trading versus doing this on your own.
Oh, tremendously. I, and let me start by saying I don't work for T3. I know a lot of the people you
Mm-mm.
have on do.
No,
So I don't really have a horse in this race.
no.
Um, but but I think T3 is a great place to learn and to trade.
Mm-hmm.
They have virtual trading floors that remind me a lot of being on the floor. You get to know the
Mm-hmm.
people in the trading rooms, you joke around when it's slow. There's some great traders with great information and great ideas. Personally, I'll give a shout out to Derek Olden Smith. I like his
Yeah.
room a lot.
Mm-hmm.
I've learned a lot from these guys. I keep learning a lot from these guys. And I think T3 is what any, I've only, in my 20 plus years of trading, I've only traded at 3 places.
Mm-hmm.
And, and 2 out of 3 I've loved, and both were eat what you kill, right? I don't need someone to tell me I'm doing a good job. I don't need someone to tell me I did a poor job managing my risk in Palantir. I
Yeah.
know. I look at my P&L and I know. I look at where I canceled my stop. I know. I got it. I didn't get out. I lost money. Or I didn't get out where I should have and lost too much money. Um, but T3 gives you all the tools and all the support for an eat what you kill environment to be successful. And any
Mm-hmm.
trader worth his salt wants eat what you kill, right? You want to make money when you're making money. You don't want to rely on some team or a whole desk or the sales team, right? You want to
Right.
you should be confident in your own trading and your own risk management. And I think T3 is a great environment for that. Uh, and again, I've been in a lot of different trading rooms. There's different for different styles and different people. Um, and I think that any trading style can find a home here.
Yeah.
And they've been nothing but helpful anytime I've asked for anything. So
Hmm.
I really like T3. I've had a good experience.
Great. All right. Well, thank you so much for being on this program today, Brant. I really enjoyed our conversation, and I think the audience did as well. So I'll have you back on again in the future. This was really great.
Thank you, Greta, and be careful in those San Diego fires out there.
Yeah. For
It's
everyone
pretty
that
crazy.
is watching, I am putting a comment in the chat now for the link for our next event. Scott Redler will be back with me next Wednesday at 4:30 p.m. Eastern. So if you guys want to go ahead and register for that, registration is open, and we will be back next Wednesday at 4:30 uh, with Scott Redler. And Eddie said thank you for your answers on the options get options Greeks. He said he has a lot to adjust and learn. Steve Waddle or Wadle says hi to you. Denver Steve here. He just wants to congratulate you on your great insight today and appreciate your comments on knowing levels, which he says was a great reminder for him. So thank you for coming on today, Brandt. I really enjoyed our conversation.
Yeah, I did too. Thanks a lot for having me, Greta.
All right, thanks.